Hey everyone, welcome back to Corporate Decoder, the place where we see through the corporate spin. In this video, we will be dissecting the latest filings from Federated Hermes funds, a company that manages money for a lot of people, and how did they do in the last fiscal year ending May 31 sale, fiscal year ending May 31st, 2025. A lot of numbers to unpack here, so let's dive in. First off, Federated Hermes Advisor Series covers several funds, and we're going to focus on a few key ones like the Emerging Markets Equity Fund, the International Equity Fund, and the International Growth Fund. These are essentially investment vehicles that pull money from many investors to buy stocks and bonds. Now, for the part everyone really cares about, the money. Let's look at the Federated Hermes Emerging Markets Equity Fund, specifically the institutional shares class. For the period ending May 31st, 2025, the net asset value per share at the beginning of the period was 14.72 cents. It ended at 16.70. So if you had invested in this fund, that means if you had invested in this fund, you would have seen a nice increase in your investment value. And that's reflected in the total return for the year, which was 14.84%. That's a solid return, keeping in mind past performance is not a guarantee of future results. The net expenses for this class were 0.98%, which is pretty standard for this type of fund, meaning almost 1% of your investment goes towards managing the fund itself. Looking at the size of the fund, the net assets at the end of the period were around $41.9 million. That's a decent size, but not massive when you compare it to some of the giants in the investment world. Switching gears to the Federated Hermes International Equity Fund for Class A. Shares things look a little different. The net asset value at the start of the period was $25.29 and it finished at $24.05. That's a decrease of about $1.50 per share. This is reflected in the total return, which was 9.09% for the year. This is the return without sales load. If you had a sales load, it was much lower at 310%. So there's a big difference depending on how you invested. The net expenses here for Class A shares was 0.77%, which is lower than the Emerging Markets Fund. The real story here is how the lack of sales load dramatically improves your returns. The International Equity Fund is much larger, with net assets at the end of the period around $777 million. That's a substantial amount of money being managed. Now let's check out the Federated Hermes International Growth Fund for institutional shares. The net asset value started at $14.79 and ended the period at $16 showing a gain. The total return for the year was 10.78%, which is a respectable gain. The net expenses for this fund were 0.84%, again quite standard. This fund is also quite large, with net assets closing in on $500 million at around $525 million. It's interesting to see the total advisory fees paid. These are the fees paid to the managers of the funds. For the International Equity Fund, it was over $3.5 million. And for the International Growth Fund, it was around $3.7 million. That's a lot of money going to management, and it's important to make sure that fee structure aligns with performance. The portfolio turnover rate tells us how often the fund is buying and selling its investments. A rate of 11% for the International Equity Fund and 30% for the International Growth Fund suggests a more buy and hold strategy, which can be good for reducing trading costs and potentially long-term gains. Now for the management's discussion sections. These are where the fund managers explain how and why they got the results they did. For the Emerging Markets Equity Fund, they mentioned country allocation, sector allocation, and stock selection all contributing positively. This is good to hear, especially when they call out specific companies like Taiwan, Semiconductor Manufacturing Cotent Holdings, and Mercado Libre as top contributors. On the flip side, they also mentioned detractors like stock selection in Brazil, Malaysia, and Taiwan, and specific companies like Samsung Electronics and Data Patterns Limited that hurt performance understanding. These detractors is just as important as knowing the winners. This is a crucial part of the filing, the evaluation and approval of advisory contract. This section details how the Board of Trustees reviewed and approved the management contracts. They look at the nature, quality, and extent of services provided, fund performance fees, and profitability. It's basically a check to ensure the fund managers are doing a good job and are being compensated fairly. They emphasize that past performance is not a predictor. However, they do analyze performance relative to benchmarks like the MSCI AHY ex-USA index. Comparing these numbers is key to understanding if the fund is actually outperforming its peers or just riding a market wave. When we look at the statement of operations for the Emerging Markets Equity Fund, the net investment income was $19,874. This is the money earned from dividends and interest after expenses. And it's important to see this number for the health of the fund. More significantly, the net realized and unrealized gain on investments was a positive 5,642. An impressive jump, which shows the managers were successful in growing the value of the investments. And as with any financial filing, we have the report of independent registered public accounting firm. This confirms that Boston, Massachusetts firm has audited the statements and they believe the financial statements present fairly. What happened, basically an external stamp of approval that the numbers are what they say they are. Let's dive into the actual fund holdings for the Emerging Markets Equity Fund. We see major holdings like Taiwan Semiconductor Manufacturing Co. Limited, a company that's crucial for the tech world. And when we look at the percentages, Taiwan is a large chunk of the portfolio at 16%. Tencent Holdings Limited, another tech giant from China, is also a top holding. China itself makes up a huge 35.6% of this fund's investments. That's a big concentration of risk and reward tied to one country. Mercado Libre, a Latin American e-commerce and fintech company, shows up too, highlighting the global diversification of this fund. Argentina makes up 6% of the portfolio. The total value of common stock held is over $40 million. That's a significant portion of the fund's total assets. Looking at the statement of assets and liabilities, we find the fund's total assets are over $42 million, with liabilities around $500,000. This keeps the net assets at a healthy $41.9 million. This number, around $41.9 million for the Emerging Markets Equity Fund for institutional shares, shows a slight decrease from the previous year, which indicates investors may have been pulling money out, or the fund's performance wasn't strong enough to retain all capital. For the Class R6 shares of the Emerging Markets Equity Fund, the total return was 14.97% for the year, slightly better than the institutional shares. The net expense ratio, 0.92%, is also a bit lower. The net assets for this class were much smaller at just over $600,000. Interestingly, the total advisory fees paid for both institutional and Class R6 shares were reported as 120,460 Dres. This seems like a typo or a very simplified reporting, as the expense ratio suggests more would be paid. Now let's look at the Federated Hermes International Equity Fund Class A shares again. Their starting net asset value was $25.29, ending at $24.0509, ending at $24.05 for the period. The net expenses were 0.77%. This is good, and the total advisory fees paid reflect a much larger fund at over $3.5 million. The total return without sales load was 9.09% for the year, a decent performance, but with a sales load it was only 0.3%. So the sales charge really eats into returns. The net assets here are substantial, approaching $777 million. The portfolio turnover rate is quite low at 11%, suggesting a long-term investment approach. In the statement of operations, we see investment advisor fees at over $9 million. This is a significant cost for investors. Net investment income was almost $19.4 million, which is positive but dwarfed by the gains in investments. The big story here is the net realized and unrealized gain on investments, which was a massive $62.9 million. This is what drove the fund's performance. Final thoughts on Federated Hermes funds. Overall, the performance seems mixed across the funds. The Emerging Markets Fund showed solid gains. The International Equity Fund's performance was heavily impacted by sales charges, and the International Growth Fund also had a decent year. The key takeaway is always to understand how you are invested, whether through a load or no load share class, as it makes a huge difference to your returns. Now, from a Warren Buffett perspective, I like to see funds that are managed with a long-term view and low turnover rates. The expense ratios, especially for the growth fund, are competitive, but the advisory fees for all funds are substantial, and it's important investors feel they are getting value for that money. Remember that concentration in a single country like China for the Emerging Markets Fund does carry higher risks. So what's your game plan for international investing? Did you invest in these funds or similar ones? Let me know in the comments below if you found value in this deep dive. Hit that like button and subscribe for more corporate decoder analysis. And don't forget to join our Discord community linked in the description below for more discussions and insights. Thanks for watching. See you next time.